All right, so welcome you all to today's section, please. Today's class, we are going to complete the very first chapter and start the second chapter with the advanced audit and assurance paper. In the very first chapter, there are two issues that I will deal with them today. Those two issues, we are highly inexpectant of one of them. Or an event where things go into our favor, or the two be there. Like the way last sitting specifically, we instructed them to look out for, in fact, audit committee. And there was one question we released out last sitting that they should solve. God did not shame us. They went, that question was there, dito. This sitting we have started early. Yes. We have started early. A sitting before last sitting too, there was a question we released. We call that question Senate, yes. Anyone that wrote the paper, if you mention Senate, they will understand. It was a pay rule, I saw some. That question I dropped 1, 2, 3. It won't come again. It will come in the different. It will come in the performance audit. To come. So this is if you want to go down, it's a performance audit that they will bring it. So let's go straight to the game. Last meeting we did we started with the regulatory framework, the regulatory environment. That's where the level 3 actually starts from. Whatever we did last sitting, apart from this, was still in the level 2 era. So from here up to, we did last meeting, we started with the audit, introduction to audit. That's level 2, audit and assurance. Even though we are learning level 3, you must have a bit of introduction. We did some what the important introductions. We've done it already. We did assurance engagement, the types, and then we came to elements of assurance engagement. Then we ended there. So the level 3 actually started from here. So that's the chapter 1 of your level 3. Whatever we have done and the level 3, apart from this, before we doing this, just introduction that you must look out for. So the regulatory environment of audit and assurance started from the need of regulations in audits. We'll talk about why do you regulate audits. We look about the professional standards. We even did corporate governance. That is where we did the audit committee. So I inform you specifically that today we'll be doing money laundering and lots of regulation. And you have to expect this. And there are 3 issues. I'll let you write them down. And you get one of them, dito. So we did all these forms of regulation. You can get laws covering audit through law. Yes. The Companies Act. Yes, by law. And then by profession. And by IFAC. Then we also have legal regulation, companies, banking acts, the rest. We did a lot. We explain who appoints auditors. Shareholders, directors can appoint and registrar general. Shareholders can appoint first auditors and fill vacant or casual. Directors, they appoint auditors when there was what? Casual vacancy. An auditor have resigned, you don't have auditor. So directors can fill those positions. Again, we also said that the Registrar General of Ghana or Registrar General's department can also appoint auditor. In Ghana, per Ghana's company school, if any company in Ghana operates for a period which is more than 6 months without an auditor, the law permits the Registrar General to appoint auditor for you by force, whether you like it or not. Because this one by force, in fact, they will appoint for you. That is, imagine during the year, your external auditors resigned. or their rotating time elapsed. You know, in Ghana, now the law is saying the maximum years you can audit a company is 6 years. Take notice. Irrespective, wherever, the maximum. Previously, some company, the auditors have been there for over 20 years. They become brothers and sisters. It reduces the quality of the audit. So the law is saying that every 6 years, go. When you go and stay in another 6 years before you come back. We call it cooling off period. So if your 6 years is due and you go, don't come again until 6 years time before you can come back. So 6 years in, 6 years out, 6 years in, 6 years out, 6 years in, 6 years out. That's the system that we are operating. So if the 6 years is over, the auditors have moved, and for about 6 months, the company have not appointed new auditor. In that case, Registrar General will step in and appoint Auditor General for the entity. All are what? Part of the issue. In fact, the auditor can resign, we can also remove. Yes, auditor can resign, we can also remove auditor. All these issues are level 2. Don't want level 3, we don't need to worry ourselves into this. Just don't worry. Just something that you must worry yourself. We did it right. Go. This one's your trial work. I ask you to go and complete this table, please. If you've not done it, I'll do it too. What are the rights of auditor and duties? Must know your rights. Professional standard. We have the ISA audit review and those one. All this on the last meeting. We did corporate governance and an audit committee. It came last sitting. We talk about money laundering. So say today we are going to discuss about money laundering, fraud, and loss. This is what we said we are going to do. Good. So this is what we said we are going to do. And I told that I owe you 2 meetings. I owe you 3 hours and 1 hour, making 4 hours. So I still owe you 4 hours. Last week, Saturday, there was a severe rain and light out the whole day. But we were able to have the class for the strategic case study. When we finish, our systems, our batteries, everything runs down. But we did that class on our own battery, our own, without electricity. So it affected the battery. So that's why we couldn't have the advanced audit class at all. So I still owe you now. I wanted to find out the day that to be okay when I have a little time from 10 p.m. up to the evening. Then I'll come and handle it for you. So let's take notice of that. All right, so in view of this, I cannot introduce you to today's section. Today's class is very fantastic. Whatever we are come to discuss, you will see it in the home frama. For exams in the home frama and because they've not asked it for some time. Yes. So take notice of that. Okay. Now let's go straight to the point. What you have to know with this. First, you have to do laws and regulation. So that's where we will look out for laws and regulation and money laundering. Laws and regulations. Then money laundering. Yeah, money laundering. So I'm doing money laundering first. When you talk about money laundering, what is it about? Money laundering. So take notice of that. Money laundering. Process of what? Laundering or launder money. You see, it's an attempt by criminals to conceal the illegal source of their proceeds. I personally call it a process of washing dirty money to become clean. It's called money laundering. So we have to talk about it fully. And what is auditor's responsibility? Here, the most important thing is that how do you identify the existence of money laundering? An auditor, what is your duty? What are the steps? That is all what you need to know. The duty, the steps you have to put in place to ensure money laundering. And then that is all. So please take notice of that. Money laundering. And then that is all. All right, so now that you understand, I can now go to look at that. So it's very interesting. And we move with a story. So you see, money laundering is a stage where criminals try to conceal, hide the origin of their illegal money, the proceeds from the illegal money, as if it's a legitimate. So they won't show you where the actual source of the money. It can be sources such as drug, slave trade, tax evasion. Yeah, in accountants, yes. If you don't pay the taxes, it's a money laundering. And all this, we have to look at it together when we talk about money, how to launder money, and then that's all. So let's take notice of that. Just a second, friends online. All right, so let's go straight to the game. Money laundering. As I explained to you, money laundering is just an activity or an attempt processing which criminal attempt to conceal the true origin and ownership of proceeds from their criminal activity. That is money laundering. So money laundering, I'll tell you where you must focus on. Please, not the definition. Money laundering. No exam now will worry you about definition at this level. Not at all. Forget about it. If you are focused on definition, but you must know it. Meaning of money laundering. How to launder money. Have you seen laundering service? What did they do there? Laundering service, what did they do there? Where they clean clothes, right? They clean clothes or they wash. So if you are laundering money, what do? You are washing money. That's all. You are washing the source of the money. That's money laundering, an attempt to hide the true source of the money. So it's a process. It's a process by which criminals attempt to hide or conceal, the true origin. And ownership of the proceeds. True origin and ownership. True origin and ownership. I'm gonna end there. Origin and ownership. Ownership and then origin of ownership of what you call of the proceeds of the proceeds from from their criminal activities. That's our money laundering. Their criminal activities. Criminal activities. Why is it that you see, some people will not tell you the true source of their money. They had the money through other means, illegal means. All the means are illegal. They are criminal. And they've done and got a lot of money. So they want to cover up so that people will not know that many companies engage in money laundering. Let me shock you. Per World Bank, the whole world, about 10% of the world's finance or money is through money laundering. 10% the whole world. So in the whole world, if you have, let's say, $100, about $10 is what? Money laundering. So it's something that the world is battling with. We don't know when they can take it off from the system. We don't think it will be possible. It will be very difficult to take it because those that launder the money, they are highly influential and they have authority in terms of money. So to get rid of them is not an easy job. Now, criminal activity include what? Drug, going to drug, terrorism, theft, tax evasion. So criminal activities. Criminal activities such as what? Drug trafficking, terrorist. I mention more. The more I mention, the more you write. Terrorism, theft, tax evasion, and other types of fraud. There are many, you can't list all of them. So process of washing dirty money to appear as legitimate is called clean money. So process of converting dirty money to become a clean money. So process of converting dirty money to become clean. Process of converting dirty money. Money that is dirty. The dirty money, not as if galamsey money or like mining money. No. We are talking about dirty money, illegal. Maybe by washing it, you see, when you wash it, washing or cleaning. So the process is cleaning or washing. That's also laundering. Process of converting dirty money into what? Clean money. Clean money. Or legitimate. That's what we call money laundering. Sometimes you will see a friend for the kind of money that is spending and then the kind of cars, luxury. It's not all of them that is hardworking. About 10% of all the billionaire, the rich, the car, the private jets are through illegal means. Tax evasion is part. Tax evasion is accountant. Accountant, their money laundering is tax evasion. They don't pay their tax. They don't pay tax, so they hide their taxes. Accountants. They have a ways of what? Going out around the tax because they have knowledge about the tax law. And then that is all. Now, what are the stages? What are the stages? There are 3 stages in which we can go through to launder money. Stages in money laundering. I'll explain to you why we are learning money laundering. You see, it is not about just criminal activity. No, it's about what they use the money for. That is make it the most worst part. What they use the money for. Most of the criminal proceeds, the drug, they are used to finance terrorists. Why is it that terrorists have a lot of weapons, much more than some countries' military? Why is that? Boko Haram came to Nigeria long ago when we were young. when we're young, they say Boko Haram have come to Nigeria very long ago, long time. They say they can trace its roots from Al Qaeda and ISIS. They say the Boko Haram leader was trained by the ISIS. Why is that Nigeria have not get rid of Boko Haram? You can't, because they have a lot of powers in terms of security tools, weapons. Where they get the money to get the weapons? They don't work. Where they get the money from? So they get the money from illegal activities, rituals, illegal activities, killing, selling body parts, criminal. Anything criminal, killing human beings, pouring their blood for sacrifice, and other stuff. Drug dealing, most of them doing drugs. And any drug dealer, when the person wants a covenant or a cover, imagine we are pushing drugs from, let's say, Africa to Europe, and I want a cover. I can go to any of the terrorism units, finance them, give them funds, not me, please. That's what they do. You finance them, and then like they stay back. They are watching your back. So that is, so we are targeting what they use the money for. They never use it for good things. Even if they use it for good things, they acquire the money through illegal means. So there are two issues that we are fighting against. One, the acquisition of their money, their wealth, is through illegal means. Number two, the use of the money after they've acquired it. They also use it for illegal things. They normally sponsor production of weapons and ammunitions. Weapons, ammunitions, the kind of guns, the kind of weapons that Boko Haram have, the entire Nigerian army, military, they don't even have 1%. They don't even have 1%. Yes. That is why it's very dangerous for Nigerian army to strike on junta army. Yes, the Niger army. Because Niger army is combined with Mali, Guinea, and Algeria, making it a full team. And Nigeria, even Boko Haram, you can't sack Boko Haram. How much more a whole nation? Yeah, so that is what we are talking about. So take notice. We have two issues with money laundering. One, how they acquire their money. Two, what they use the money for. That is why we are not interested in that. Aside this, if they should get their money from good source, use the money well, we don't have a problem with them. So there will not be any need for even learning money laundering in class. Because of them, we have gotten a topic. Now let's go to the stages. Stages in money laundering. And I'll tell you why you must focus on stages in money laundering. So stages in money laundering. Here, how did they launder money? What are the stages in which the criminals launder money? The stages in which the criminals launder money. This is very topical in youth examination. Take notice of that. Now, when you say money laundering, first stage is called placement. So the first stage is called placement. As the name suggests, placement. Placement is an attempt to integrate the proceeds from the criminal activities into the financial stream of a country or economy. So where the criminals attempt to integrate so attempt to probably bring. So here they are placing or they are integrating the proceeds into the financial stream. So here, bringing the money into the economy. So here, converting or here just bringing the funds and make sure the funds come into the funds come into the economy. I don't use the word integrating, though it's the right word to use. They integrate the money, they absorb the money, they convert the money, or they transfer. Good. The right word is transfer. Transferring the proceeds. That's the right word. Transferring the proceeds. Proceeds of the criminal activities into the financial streams of the economy. They usually use it's just like mixing up the dirty money with the clean money. So here, for example, just mixing up the dirty money, the illegal money. If you want me to go back to the previous page, you can alert me through text. I'll go to the previous page. Process of mixing up the dirty money with the good money in the country. How can they do that? How can they place this? They do the placing by bringing the money into the financial system where there's a lot of what? Cash. Where there's a cash, highly cash business. So normally use cash, pure cash businesses. So cash businesses. It can be restaurants, betting companies, and those ones. Okay, so cash businesses. I can give examples of that. They normally use financial institution to transfer the money. So let me give a quick example. Imagine there was a drug dealer in a different country A. But you know, one thing about them is that they don't spend their money in the country where they go through. One thing about money launderers is that they are very smart. They don't spend the money in the country where they earn it. That's what they do. So that you can not easily trace the source. So they can decide to do the drug business in, let's say, country A. For them, they are living in country D. First, they try and then move their money from country A to country B. Further move it to country C. Invest in country C. Now bring the money to innocent country D to spend the money. They don't normally try to spend the money at the same place they earn it. And then when the alarm strike. So by the time you trace from country A to country B, he has gotten the hint already in country D and run away. You can't catch them easily like that. You cannot easily catch them easily. You can't. So the only thing you can do is that you put systems in place. So they use it through financial institutions. And let me show you how it's done. They can do what's called small deposits. They can make huge deposits in one time. So like they have about 500 billion US dollars. 500 billion, not million. 500 billion US dollars. Which they want to place it. Place simple means they will find a way to come and put this money in the economy. And when the money enters the economy, they will try and use it, and then the original source will be missing. Nobody think about the original source again. Now the money is in the economy. Let me tell you a typical example. Have you seen those spiritual people that they say they'll give you money, they give you money, they give you money? You know, when they give their money, some of their money is fake. They have a machine that cuts. Some of them have the machine that cuts money. And the money that they normally cut or print, normally it's not quality durable as the government printed money. Because some of the sealed, they cannot get it. So what happened is that after they printed the fake money, the herbalist, the juju man, had to lead to the bank and go and deposit the fake money. As soon as this money, the fake money enters the bank. Yes, that's why most banks normally use the micro bulb so that juju doesn't work there. Other than that, juju will take all the money away from bank. So if this fake money find its way into the bank and there's no system in the bank and they were able to deposit the money in the bank, that's all. Hallelujah. That's all. He has placed the money. Simple. That's the first stage. We have found a way that the illegal money will come to an account. It's in an account where we don't want. It's in a country where we don't want. It's in, let's say, country A. We don't want it to be in country A. I want it in country D. But don't push it straight forward so that when the things strike, they can trace it easily. Pass it to country B. Go to country C. Go to country D before finally push the money to country E. So before they can trace, they'll get tired. And because before they will trace and get the roots, we've already found our way out. So that is how they do. So placing simple means finding the money into the streams, to the financial streams. How do they do it? By doing regular transfers. They do it by doing what you call regular or periodic transfer. Good. They used to also buy expensive item. Acquisition of luxury properties. Acquisition of properties like boats, ship, cruise. Yes, in this era, they find it very difficult to integrate the money into the banking system. In this era, you know that now banks have a lot of sophisticated equipment to detect illegal money or fake money, counterfeit. But we still know countries that create counterfeit. There's a country in West Africa sub-region. They are known for counterfeit. Yeah, they're in the South Africa region. They are known for their counterfeit. So after they themselves, they know how to do it so that whichever bank they go, they can accept. Even in country, even in Ghana, you have come across counterfeit a lot. How do they find its way? How do they find its way into the system? And this counterfeit they were talking about, it's not like $2,000, it's not like $20,000, so it's over millions of dollars. So at least here they'll do what you call multiple deposits. If you see a lot of multiple deposits, it suggests that someone is going to do placing multiple deposits. Multiple deposits. And you see, they've done all this, the banks are aware. So the banks managers, the tellers are being trained when they suspect. So we learn evidence or indications of what suggests there's money laundering. If we see regular transfer, multiple acquisition of property, multiple deposits, and huge payments, you can say you'll be there and a one-time payment, huge transfer, huge. The money involved is very huge. Huge transfer, one time, 50 billion at a time. They enter into real estate. Good. That one is the layering. The first stage, they don't normally use it to buy stuff. The first stage, they just want the money to come into the system and have peaceful mind, because they know that if they used to buy items, they can easily trace it. So they find a way that the money goes into the financial institution or the financial stream, into the economy. So that's what I mean by layering. I'm down the placement. The next stage is called layering. Layering. Almost a shade, you know. Yes, layering. That's in step 2. Layering. At this stage, the money is in the economy already. The fake money has arrived at the bank. All the money have come. They've been able to pass about, if not successful, about 80% of their money have been moved. At the placement, they just want to find some place to place their money. That's all. So if the money was sourced here, the illegal activities was conducted here, they have about $200 billion. They will do multiple transfers. They will have a lot of, like, 10 different countries. Let's say 10 countries. 10 countries. They divide this one by 10. What do you get? Divide this one by 10. 20 billion. So they transfer 20 billion to each of the countries' bank accounts. They normally use individual. That's why I see young people, they use some people's accounts. So they can go to a community, organize guys like about 4, every community, 4. They get like 200 people. Go and open bank accounts and give me the account numbers. I will send you money into that account. I'll come and take it later. So within a day, you can sell like $20,000 to 200 people. Small like that. Within a day, but I realize we have transferred all the 10 billion from country A to different countries. They don't use just one country so that you can come and catch them. Like different countries. And then when these countries also get the money, they also transfer to another country. So country C, C1, C2, C3, C4. Then all this one to also transfer to another centralized point. This one also transfer to another centralized point. All these are placing. Then finally, the money is transferred to the last country, country D. That is where they want to spend the money. Maybe sometimes they don't spend it there. They just want to invest. So that's also when the money hits the financial stream, they'll be able to transfer about 80% of the money. They now do what we call layering. And the layering, they do what we call investment. They're now entering into investments. Legitimate investments. They enter into legitimate investments. Several transactions or layers. Complex one. Moving funds from country to country. Investing from country to country. Yes. Like moving from country to country. So layering here, like moving the funds from country to country. To layer it. Or having what you call multiple investments. Moving the funds from country to country. Maybe for what? For an investment purposes. At this stage, they'll just want to invest. Number 2, multiple investment. They normally invest in high cash business. This is what they do. They invest in high cash business. High cash. Give me examples of business that they will cash, pure cash. Or high value of cash. Say high cash business. Or large volumes of cash. Example, betting company. They can invest in betting company. They can engage in my bets. They can engage in restaurants. They can engage in car sales, sale of cars. sale of cars. So now, after they find a way of integrating or placing the money into the financial stream, they will now invest. Full-time investor. So they will be investing. My bet. Betting, it can also be in the form of clubs. They want where they can get regular cash so that nobody's mind will come on that this is illegal money. Me, the person I've done bets and the person I've won bets, or the person I've bought a shares, he has got a return, who will tell that this money is a laundered money? No. The person owns a lot of restaurants. Even when the restaurant make a loss, it doesn't affect him. He just looking for a recipient company to receive the money. So what's that? And then again, after investing, after some time, they will now recoup and integrate the money back into the financial system. Integration. So over here, step 3 is what? Integration. Here they will integrate the money back into the financial system. Integrating the money back into the financial system. This is the time that they spend the money. Please, when they read this time, you can never trace. At this stage, it's very difficult to trace the source. They feel to clean the money. So this is the final stage. Now they move the money back to the economy into legitimate form. Legitimate. This time around, the money has become legitimate. In a legitimate form. Legit. How do they do that? Now, after they buy shares in a company, go for the shares money. Use it to buy property, now spending the money. Because if I've invested in shares and I've gotten a return, you can't come and tell me that where did I get that money from? You can't come and tell me that where did I get that money from? So that one, you have no hand. So you can't come and tell me where did I get the money from? All money be money. So at that stage, you find it very difficult. You can't trace it when the money is being integrated. So at that stage, here, the money has been laundered already. You can't trace it. You can only trace it when the money is being placed in layering. And those 2 stages are the one that you can easily trace. So that's why they have billionaires. They've never been caught in drug issues because they know how they can place, layer, and what? Integrate it back. You place, you layer, integrate it back. You place, you layer, integrate it back. Find a loose loophole, a loose economy to put the money into the economy. Layer it, transfer. And then what do you do again? You integrate the money back and go and spend it. Final step. I should not inform you the auditor's responsibility towards money laundering as an auditor. Where is it important to us? Yeah, so take notice of several offenses. Now, there are some shocking ones that when I mention it, you'll be amazed. You know that anytime a customer overpaid you and retained the money, it's a money laundering. There are various criminal offenses connected to money laundering. Please, if you have maybe process of any money that's coming from overpayment, customers have overpaid and you are holding on to the money, it is what? It is money laundering, connected to money laundering. And then payment of bribes. Payments made overseas that are deemed to be what? Bribes, and will be illegal in Ghana. So bribes and those ones. An attempt to commit any of the stories you've talked about, all of them. Yes, and a failure by a person in the regulated sector to, in fact, this one is very key. Failure by a person in the regulated sector to inform the appropriate party and knowledge of what another person engaged in money laundering. So please, if you know that one person, someone is doing money laundering, go and say it. You're also part of. You're also, especially accountants. Accountants will always find themselves in it. You know very well that the bosses, the CEO that you are dealing with is into money laundering, and you're not telling anybody. You are part, please. You are part. Failure to make a disclosure, which is likely to interfere with investigation into money laundering. Tip off. If you have a lot of information, you are not helping the investigation. This is part accountant. Here, this is where we normally found guilty. We just don't want to blow the whistle. Good. Now, what are the defense accountants will do? One, report. Report to the appropriate authority. That's the only way you can save yourself. Report it to appropriate authorities, and then you acquired or using properties adequate consideration in good faith, and then that's all. Now there are a lot of regulation that talks about the money laundering. What are the regulations that talks about money laundering? And then we move on with the game. So we have a lot of regulations. Countries, US alone, have a lot of number of what money laundering. So regulations against money laundering. So here, and something we also have intergovernmental what bodies. Some governments can come together and form and have a section like that. Okay, so the defense, right? Okay, let me go to the defense. You just take the defense again. You see, accountant, what are your defense mechanisms? It's a report. You're going to report because you have a duty to report. Report it wisely. Report it to those appropriate authorities. Then after reporting, what do you do? Does not end there. So anytime you have made a report, you see, there will always be an intention to make a report and reasonable excuse. That is for not having done so. So always what I'm trying to say, make the report. And normally, fear of what? Physical violence or other issues. That is why most of the accountant does not report. So take notice. So the defenses that you can use as an accountant is what you're talking about. One, you must report. That's the first. And second, there was an intention to report, but there was something that prevented you. So the second one is that there should be an intention, reasonable intention you must know that yes, you had wanted to report, but everything prevented you. Your life was threatened. You were even kidnapped. So like they've even located your country. Those people, they are very dangerous. Those terrorist people, they are more than government. They have far more than the president of a country. They can relocate your country for you. They can change your passport for you. Try them. So maybe you encounter some people like that, and your life was threatened that if you go the whistle, that's the end of your life. And where you are to, they have every information about you. They have even deposited a tracker within your body. They have 3 trackers. Yes, 3 trackers in your body. 2 of them, you don't know where they place it. So even if you go for a surgery, no qualified doctor can remove the tracker from your body. And one of the tracker record everything you say. Everything you say, your movements, one of the tracker record it. Those people don't joke with them. When they say they will do something, they sit down over 40 years and plan. So that is that, because they have the money. They don't suffer before getting the money. So they get block money. So they can use to buy expensive mechanisms to make their work very easy. Very easy, to make their work very easy. And anytime they work to, they have detectives. So that is that. So anytime you sense something like that, you defend and then you go. All right, so the regulations over here too. What are the laws that have come so far? In light of this, what are the laws that have come so far? So there are a lot of countries have come on law, and then we can talk about the Financial Action Task Force on Money Laundering. That's the Financial Action Task Force on Money Laundering. They also come out. Many countries have now have legal provisions in place designed to detect. Ghana is number 1. Ghana, we have Anti-Money Act. And then Ghana is a member of Intergovernmental Actions on what? Group Against Money Laundering in West Africa, Gambia. All of them are there. Please, in Ghana here, let's list some of the anti-money laundering laws. In Ghana here, good. So yes, Act 749. I'll take that. The Money Laundering Act. Yeah, so there are a lot of regulation when it comes to Ghana put in place. There are a lot of them. So we are going to list some of the regulations. I've still not gone into the auditing aspect. We are still talking about what it is, why is it bad, remedies and laws. Find that the latter part is what you need for your exams. Auditors' responsibility towards that. And then how they can prevent that. So the regulations are in Ghana. This one is in Ghana. I can list some of the world. UK and US have some. So let me see if I can get some. The national one, Financial Action Task Force on Money Laundering. So we call them FATF. All of them are there. So these are one are world. World. Got a Financial Action Task Force on Money Laundering. That is for the world. UK, US have diverse number of votes. The Money Laundering Act. US, for instance, US have what we call the US Patriot Act 2001. Yes, they also have money laundering over there. And then money laundering regulations 2007, UK. UK also have money laundering. So a lot of them, all these are the world, US owned versus UK's acts, a lot of them. So all these are the world. Now, let me come to Home Sweet Home, the living legend. Yes. Have you now our flag? Yes. Let's come to Ghana. In Ghana, what do we have towards money laundering? What are the structures put in place towards money laundering? You have a lot. I can tell you a lot. So in Ghana, the money laundering laws and regulation. Yes, Ghana is number 4th peaceful country in the whole Africa out of the 54 countries. Ghana is number 4. We are the number 40th. That's the crime index. 40th in the world. 4 times 10, 40. What a wow. So Ghana is open to everyone. Peaceful country. No wonder our president, one of our presidents said, no wonder. All right, so first of all, we have what we call the Anti-Money Laundering Act 2008. And then the rest. And then there's what we call, before that, Ghana itself is even a member, yes. A member of a giant international body. So the first one, we can say 1. Ghana is a member of what you call the Intergovernmental Action Group. So Intergovernmental Action Group. So take note, against money laundering in West Africa. So Intergovernmental Action Group. So let me write this more here. Member of Intergovernmental Action Group. Against what? Money laundering. Ghana is a member. That's our first regulation. Number 2, when it comes to Ghana, we have what we call Anti-Money Laundering Act. Anti-Money Laundering Act. Someone said the act. You can tell us the act. Act what? Act 2008 into bracket Act. That's the Act 749. Yes, I'll take that. Act 749. 749th Act that Parliament of Ghana produced. Amendment to the Anti-Money Laundering Act 2014, Act 874. So we also have another one again. So the amendment to the Anti-Money Laundering Act. Money Laundering Act 2014. And then it is Act 874. Act 874. All these are money laundering regulation in Ghana. Not that I want to be biased, Home Sweet Home. So number 4 will be the issues that we have in our country. We also have what we call the Regulation 2000 11 LI 1987, and Ghana's Companies Code. All of them are in there. So Regulation LI 1997. So regulation or regulation 2011 LI 1987. All these are, and then the last one is the Companies Code. The Companies Code. The Companies Act of Ghana. The Companies Act 2019 up to 992. All right, so that is that. It's just like my power is going down small. So I'll get it again. So basically, that's all. Now, obligation placed on the professional firm. That is what I'm now entering into the auditors. What are the required rule of this? And then we move on with again. So auditors or audit firm responsibility towards money laundering. So here the audit firms, what are their responsibility? Not the individual auditor. So the audit firm as a goal. So audit firms' responsibilities, audit firms' obligations. So the audit firm's obligations. Number one is provide what you call training, educating the audit staff that check money laundering is there. Money laundering is there. So training and educating staff. So they have to educate their staff for detecting and reporting suspicions. So the first one is, it is obligatory of the audit firm to train. So this is where your exams start from, training and educating. Training and educating the audit staffs on what? Detecting and reporting suspicions. So anytime you suspect that this is money laundering activity, what do? You report. That's all. Number two, the audit firm also required to establish procedures within the firm for reporting money laundering suspicions. For reporting any suspicion. So they have to also establish procedure within the firm for reporting, not just training. Establishing reporting procedures. We normally call it money laundering officer. We call it appointment of money laundering officer, MLO. So they must have an office within the audit firm where anybody who suspects money laundering will probably go and then honor your case. So these are what the audit firm have to do towards money laundering. And these are the areas that I want you to just look at it. Just look at it for me. Now you have to also establish and enhance the records keeping system. for all transactions. Yes. So here, why are you doing that? Records keeping system. It's like know your clients. So it's about KYC. Audit firm must know their clients. So know your clients, KYC. So that is what I want to say. So records keeping. Keep records because maybe your firm is into money laundering. How do you know that? You compare records. Last year your sales was 200 million dollars when COVID was in. Now today it didn't work, but you're earning 5.4 billion. I said, what? So now the issue is anytime you suspect, it must be based on records. So if you don't keep proper books of proper records of your clients, when the client change level, you never see it. So please make sure that you establish enhanced record keeping system for all transactions, which must be kept for at least 5 years. Keep it for how many years? 5 years, please. Don't just destroy your client financial statement like that because you are done auditing them. Please keep it for at least 5 years. Yes, so that we see. And then that is it. So all these are what they have to do. Again, appoint what we call money laundering officer. Very important. Money laundering reporting officer. Appointment is on its own. Here you establish reporting structures. Here you appoint. Appointment of money laundering reporting officer. It's different from establishment or reporting procedure. The structures. Here they are reporting to the money laundering procedure. So here they are reporting to the money laundering officer. They are reporting to the, but here you are establishing just the reporting structures. Okay, that anytime there's money laundering, write the report, write to this place, sign here, this person must sign, provide evidence, the structures, how the money laundering should be reported. Whom are you reporting it to? That's what we call the reporting staff officer. We call it MLO, money laundering, MLO, money laundering what? Officer. He's the one that will be in charge. Or money laundering reporting officer. And then control procedure. So there must be adequate control procedure. That's number 5, controls. Certain internal controls, and then that's all. So these are for the professional bodies. Now, the duty of confidentiality and money laundering. So you see, anytime you get the information that your client is into money laundering, yes, in a normal duty, you are not supposed to go and blow the whistle. Yes. But here, the accountant's normal professional duty of confidentiality to the client is not an adequate defense when money laundering is concerned. So please take notice. You can't come and defend yourself that you don't want to go and blow the whistle. You see, you can't come and then tell us stories that it's confidential, confidentiality. If you're going to blow the whistle, my client will take offense because I am leaking confidential information. Please, this is money laundering. Money laundering, in fact, just go. In fact, the law will protect you. The law will protect you because something Whistleblowers Act, it will protect you. Every country does some so that we can get rid of all these illegal and criminal activities. So don't say that, oh, money laundering and confidentiality. No. So take notice of that. Now, over here, we are done. Now we are going to start the laws and regulations. I start 250. So that's all of money laundering issues. So money laundering, especially the auditor's responsibility, suppression of money laundering, what should the audit firm does, especially the individual level, you must know your clients. KYC is very important. When I say know your client, understand what the business environment of your client, so that when you change level, you can also see that this client has changed level. Some of the clients, you never see that they're into money laundering. There are a lot of companies operating in the world, they're into money laundering. A lot of companies, their owners, it's not the company's money they own to. They are just using the money to chop their own personal company, to spend on their personal money, not the company money. So a lot of them. So you see a lot of transfer hitting the account left and right. Foreign transfer left and right, foreign transfer left and right. So they just use the company as a basis, as a cover. So people will not notice the true source of what? The money. Once I'm working, even if I end loss, if I get lost along the day, the person wouldn't mind, will still continue working. We know that the central focus not about the loss, but it's about where he can hide to spend his money. Simple as that. So I'm done. Let's go to ISA. ISA 250, laws and regulation. So auditor, what's the responsibility? You've done it. Auditor's responsibilities, if I should summarize it, or audit firm's responsibility is to do what? We've talked about 5 items: training and education, establishment establishment of reporting procedures, know your client, records keeping and industry, business environment. You have to know everything. Understanding the entity is also key. And then appointment of money laundering officer or reporting officer. Then you know reporting controls or tight controls. You put in control measures. And then the rest. So now let me talk about laws and regulation to end the show. ISA 250 talks about laws and regulation. Laws and regulation. Now, the laws and regulation here, what are you talking about? Over here, there are issues we have to talk about. Effect of non-compliance with laws and regulation, the effects, responsibility for compliance, who is charged, the legal environment, the indicators of non-compliance. Let me list the issues that you must know under this angle. First, the effect of non-compliance with laws and regulation. What is the effect? You must know the effects of non-compliance. Effect of what? Non-compliance with laws and what? Regulation. So if you don't comply with laws and regulation, if you're not complying with laws and regulation, what do you think will be the effect? Here we have 3 forms of effects. Here we'll be talking about effect on the financial statements, effect on going concern, effect on company's reputation, reputational damage. If you don't comply with laws and regulation, what will be the effect? Effect on the balance sheet, then company's what? Reputation, and then the rest. Going concern is also part. The law, in fact, if you don't comply with the legal laws of the country or the legal issues or the regulations, but I realize they are shutting down your operations indefinitely. They can decide to shut down your operations because you fail to comply with what? The laws and regulation. So you must first of all know the effects. There's one that I will discuss, global. The global issues in 2015, all those ones. Now, number two, after you knowing the effects, you must also know responsibility for compliance with law. Who is responsible? Many people say it's the auditor. It's not the auditor. Auditor is not responsible for compliance. Who owns the responsibility? You must know this, is very important. Responsibility of compliance with what? Laws and regulation. In fact, it's the directors and management. And how did they do that? So if I'm able to do all this, then we are done with chapter 1. Next meeting, we are doing chapter 2. And we'll be able to complete this tonight. We are finishing everything. And you will get a question we pull out from here. So take notice, and I will explain those questions to you. Check your data portal. I will upload those questions there, and you pick it up from there. Again, we have to also talk about legal environment and non-compliance by clients. The legal environment, the laws, so legal environment, the laws itself. Again, we also talk about indicators of non-compliance. Very important. Yeah, this one has come 3 times. Indicators of what? Of non-compliance. Indicators of non-compliance. The last one that we'll look out for, the actions. Actions by the auditor in event of non-compliance, and how do you communicate? Actions by the auditor. So auditors' actions. Actions in event of non-compliance. In event of non-compliance. Or suspicions or suspected non-compliance. Suspected. Yeah, we may talk about communications and the rest. So take notice. I'm done. So these are the sections you must know. How many sections so far? 1, 2, 3, 4, 5. So 5 sections. And then we go. Let's go straight to the game. I'm starting by telling you effect of non-compliance. So when they don't comply with laws and regulations, you see, I always say that there's no company on this set that live in isolation. Even Target Professional Consult is regulated. In fact, we operate under laws, subject laws of the country. We must first of all have business permits. We must also renew our trading license. We must first of all have all this stuff. So what if in event where Target Professional Consult don't have, what do you think could be the impact on our financial balance sheet? What do you expect? Provision. Provision for what? Penalties, interest to reduce the profit. Going concern. What if some of the laws that we have infringed, or if not compliant, it amounts to shutdown of the company? What if the other ones, reputational damage? Yes. The kind of good old Target Professional Consult have created. Now, if you do not comply, now let me ask the question. If Mess Good come back again, I'm too arrived, and if I employ you as the new managing director or the MD or the general manager, we take that role. I'm not too sure you will take it because of the reputation they've created for themselves. So always take notice of that. And then let's discuss the impact. I will be summarizing it so that I can move faster. Now, here, when you say the effect of non-compliance with laws and regulation, some of the laws have direct effects on the amount disclosed in the financial statement. They have direct impact on the financials. For example, tax or pensions laws. That one, tax, they will find you penalty and it will affect your profit. Other laws do not have direct effects on the financial statements. However, in fact, the compliance with these laws and regulations is fundamental in order to operate well. Now, another example include what you call compliance with terms of operating license. Yes. So that one, let me illustrate it to you how that one works. Let's go. So we have effect of non-compliance. So if you don't comply with laws, what are the effects? We have effect on the financial statements. On the financial statements, we call it direct effects. This is called direct effects. And we have the other, that's the indirect effects. The indirect effect, that's the one I give example, going concern reputation. Indirect effects. So example, when I start the questions of you see all this inside. Example include what going concern. Example include reputation. Your reputation will go. Now, typical example of the other. You see, examples of the direct ones. Let's give examples. One, tax and pensions fines. So tax laws. If you not comply with tax laws or tax provisions, what happened? Tax man will never forgive you. You charge you penalty, you pay. Pensions provisions or pension laws. Pensions provisions, all this have direct impact on the financial. And then the other, these ones are example. Compliance with regulatory license or operating license. Compliance with the operating license. Compliance, so let's tell them now, compliance with the terms of operating license. Some of the companies don't comply with their operating license. We are giving you license to mine gold only in Azim. By the time you realize you have entered into some different region. No. So that one is operating license. The law will specify how you must operate. You are doing something else. Another example is compliance with regulatory solvency. You see, compliance with regulatory solvency requirements and compliance with environmental regulation. The law is saying that you must have what you call fire extinguisher. You don't have. The law is saying that you must, all these are regulatory. The non-compliance with any of them may result fines, penalty, litigation, and finally they may affect the financial statement. Take note. So indirectly, all of this, whether it's other ones, the indirect effects or the direct effects, it will still affect what the financial statement in the form of what fines, penalties, fees, extra charges, and then the rest. I'm done with the first section. I'm done with the effects. So we have the financial effects. The non-financial effects is going concern and reputation, reputational damage. Now, I don't think number one to grab any job decent job in the country as a director. If you own a company, you employ number one, reputation is gone. So this is effect for not complying with laws and regulation, and that is it. Now, who is responsible for ensuring that? So I'm on the second one. I'm done with the first one. Thank God, though. You're done with this. Now let's go to responsibility of compliance with laws and regulation. I wrote management, please. That's the answer. It's supposed to be regulation, not management. But the answer is management. Responsibility of compliance with laws and regulation. Who is responsible? So responsibility of compliance with laws and regulation. So please here, take notice. Auditor is not the one, please. Auditor is not responsible for the entity to comply with their laws and regulations. Please, auditor is not part. Auditor's job, I'll mention it to you. Auditor's work. That's the last thing I will learn, and that's what you must focus on. So here, the responsibility for ensuring the entity, to ensure that the entity will comply with laws and regulation, lies in the hands of management, with oversight of those charged with governance, like board of directors, not the auditor, please. It's the management and what? Who? It is the management and the supervision and what? Oversight of those charged with governance. That's board of directors. They have to supervise that. So I'm done. So take notes, it's not the auditor. It is not the auditor, please. But not the auditor. Then what's the auditor's role? Will tell you. Auditor, if anybody tell you that you have just watched and the company did not comply with the law, just don't mind them, okay? Tell them that they don't know what they are saying. Auditor does not enforce laws and regulation. Auditor, we have our responsibility towards laws and regulation. This, to enforce laws and regulations, in the hands of management, and which should be supervised by who? The board of directors. This one is the board. Here, those charged governance means board. Those charged governance means board of directors. Okay, so basically that is it. So management have to implement policy procedure to assist, prevention, detect non-compliance. So here management to, again, management must done what? Management must fact can implement, not must. It's not something like it's a must on it. They can do it. But this work is the work of auditor. That's why we use the word can. Management can implement. They can implement what? Policies, procedures, to assist with prevention, to prevent, and what? Detect non-compliance. Now, what are the procedures, such as what? So what is management responsibility? What should management do? First of all, they have to monitor the legal requirements. That's all. Including engagement with what? Lawyers. So here they have to monitor legal requirements. That's all. Monitor legal requirements or monitoring. Number two, management have to ensure that the company operates in meets or comply with laws and regulations to ensure that the entity operates to. So is the management ensures that the entity operates within the law. Management management must ensure that the entity operates within the law. Management must ensure but they must ensure that the entity operates under the law or within the law, or under the law. The third one is maintain as a law register and keep to date. Develop and maintain develop and maintain adequate asset register or updated. Okay, so to do not asset register, it should be law register. We also have laws register. Now we keep all laws, and then the significant ones. All right, so basically that is it. So you establish internal control. All right, so basically that is it. So we are done. Now let me add more point to it so that we here you have to establish what you call control system, internal control system. So management have to set up internal control system. All right, so basically that is it. Internal controls. Of course, developing and publishing and following code of conduct. So you must have a code of conduct. Okay, so that's internal controls. Then we'll talk about the developing and publishing the code of conduct. Yes, code of conduct, very important. All right, so internal controls, and then here to we say they should just look out for what we call the code of conduct. So they have to develop code of conduct. All right, so basically these are those responsible for money laundering. Sorry, I said money laundering. The laws regulation. Now, legal environment and non-compliance by clients. Yes. So here, ISA 250 requires consideration for loss regulation. Audit of financial statements require the auditor to. So these are the responsibility of the auditor. Now I'm now going to do this management, what they have to do. So this is management. Now let's go to the auditor. So auditors' responsibility towards laws and regulation. So auditors' responsibility towards laws and regulation. Auditors' responsibility towards laws regulation. Auditors' responsibility. Auditors' first responsibility to obtain is to obtain general understanding of the entity. That's all. So general understanding, that's your first you must know all the laws, know the laws of the entity. No, so the first thing is to obtain the general understanding of the entity. Know your client. Obtain the general understanding of the entity. When you say obtain a general understanding of the entity, obtain a general understanding of the entity, what are we talking about? Understand the entity's general environment. The issue is that here it means that know all the laws. Auditor must know the laws. So auditor must know all the laws. So auditor, first stage, auditor's responsibility. Know all the laws governing your client. Know all the relevant laws governing the client. All the relevant laws governing the client. That's the first stage. Know your client, KYC. Why do you have to know all the laws? So that when you flout any of them, you can detect, you can even inform them. So that is what we have to do for the first time. So as an auditor, you are not responsible for the client to know, for the client to comply. Your work is to know all of them. So we call that one as a 315. understanding the entity is called ISA 315. ISA 315, understanding the entity. If you understand the entity, it helps you to identify all this, the laws that you understand the entity in terms of the laws. That's what we are interested in here. Again, obtain appropriate and sufficient audit evidence in respect to what? Compliance. So obtain sufficient and appropriate evidence. So let's go obtain sufficient and appropriate audit evidence. Sufficient Okay, so that is that you must obtain sufficient appropriate audit evidence and appropriate audit. So here you must also perform additional procedures to identify instances of non-compliance and its impact on the financials. This is very important. This one, use red pen to write this. You must assess, you must detect, you must perform audit procedure. So select audit procedure or perform what you call audit procedure or audit procedures. Perform audit procedure to identify non-compliance and its impact on the balance sheet. To identify non-compliance and its impact on the financial statement and its impact on the financial statement and its impact on the financial statement. So you identify non-compliance and its impact on financial statement. So you select audit procedure that will help you to identify whether the entities flouting laws. How do you know? Because it's indicators of what? Non-compliance. That I think that was that's the last but one that we look for. Indicators. Then obtain written representation from management that all known instances of non-compliance suspected have been disclosed to the auditor. So here, you see, you can sometimes shadow with the management, sit with them one-on-one. Any laws that you defaulted, tell us, let's see. So here, written representation simple means document that management will document all the non-compliance to the auditor. That's the process. You have to obtain that. You must obtain a written representation. It shows that the entity have not comply with certain laws. So number 4, audit procedures. Number 4, obtain written representation. Obtain, ask the management. They should give it to you. They have it. So obtain written representation. So it's very important. But we're almost done. Good. So here we'll do what you call obtain a written presentation from management that all instances of non-compliance have been communicated. So take notice. Obtain a written representation for non-compliance. That's all. What are the indications? Yes, very important. Indications. How do you know that your clients have flattered the law or have not complied with the law? There are so many indications. Indications of non-compliance. Indications of non-compliance. Now, in the case of non-compliance, how do you know that the clients have flouted the law? Let me give you a lot of instances where you can see, you can even talk about it. You see, when there's an investigation going on, they're investigating your client. Your client is under investigation. When a client have been paying fines, penalty, court case, litigation, when there's a social media, when there was this one, news, the news is all over. All these are the indications of what's the non-compliance, the indications of non-compliance. So let me talk about one, investigation by regulatory bodies. Your client is under investigation by regulatory bodies. If everything is okay, they will not place you under investigation whilst they don't tell what's going on. Then payment of fines and penalties. If I see that you are paying fines, penalties, then there's something wrong. Payment of fines and what? Penalties and the rest. So you may end up paying penalties. So the penalties alone. Number 3, you can sometimes see excessive sales commission or agent. So that is excessive agent commission. Means that there is something that it went contrary. So it means that they have paid money, and the entity have paid money. The entity have paid extra money. That's why the agent fee is excessive. So take note. It is investigation. What did I write? But what investment? What a wow. Wow. Yeah. See that my voice is going down, and she is going down. See that investigation. Good. But excessive agent commission. Yes. Or sales commission. Why would be a suspectable one? You see, if everything's all right, why do you pay excessive commissions? So excessive commissions in relation to those ordinary paid by the entity in the industry. So before the service can be received, AMA and Co. Payment for unspecified service or loan to consultants. Yeah, it's true. Payment for what? That's number 4. Payment for unspecified services or loan. Services or loan. Or even consultants. And then we move on with the story. Yeah, so take notice. The indication number 5, we can talk about news media. News and media, indicating again, is it the payment of the, yes, you can also have what you call payment without proper documentation. So like adverse media comments, news in the media. Let me call it adverse media comment. Adverse media comment. So adverse media comment is number 2. All right, so the 6th one will be strike actions or demonstrations by those who are living in the community. You realize that you've done something, if like the law is not ratified. So the concerned youth of this will come and attack you. So let's take notice of that. All right, so that is basically what we have to discuss in terms of the laws and what regulation. Now, what are the actions by the auditor? If in the event where you identify non-compliance or you suspect, so there are 2 things: either you identify or you suspect. All of them have the same procedure. So anytime the auditor identify what happens, so action by the auditor in event of what? Non-compliance. So actions by the auditor in the event of non-compliance, or when they identify non-compliance or suspension, suspectable, non-compliance. So here, obtain an understanding of the entity. The following procedure, probably we have to take notice of the following procedure. Is if the auditor identify or suspect material areas of what? Non-compliance by the company. The company must, 1, obtain the understanding of the nature of the act that occurred. So auditor, your work is to do this. One, to get to know the actual information, get the facts, get the evidence right. All right, so basically that you evaluate the possible effect of the non-compliance on a financial statement. So anytime you suspect, first thing that you have to do is to obtain understanding of the nature of the act. First thing, understand that act, understand the nature of the act. What law did the entity did not comply? Second, you must know the second point. All right, so here, first thing, you obtain understanding. Second, you evaluate the possible effects of non-compliance on the balance sheet. That is your work. Anytime you suspect non-compliance, this is what you have to do. You evaluate the possible effects of non-compliance on non-current assets. All right, so its effect on the financial position, its effect on, let me see, the financial statement, FS. And then, you see, for the suspected non-compliance, discuss the matter with management. If compliance is not demonstrated, take legal advice. That's all. So you discuss with management for non-compliance, suspected. If it is for suspected, not identified, suspected. If it's for suspected non-compliance with laws and regulation, discuss with management. Okay, so that is that. All right, so if there is sufficient evidence of the suspected non-compliance, consider the impact on the reports, whether modified or non-modified. Then consider how the reports all right, so that is that. Then you now consider whether or not the non-compliance impacts on areas of the audit, risk assessment. Good. Then finally, you consider how the report of non-compliance will be communicated, especially to those charged with governance. All right, so on that note, we are done with the storyline. So we have extensively dealt with money laundering and then laws and regulation. All right, so basically, that is that. Let me write what we do here. Our next meeting, we have to tackle critically what you call the ethics. Ethics. That's the next section. Professional ethics. That's chapter 3. Yeah, so professional ethics is chapter 3. Professional ethics. I'll do that in the next meeting, and then we are free to go. All right, so basically that is it. All right, so basically, that is the end of the story for today. And then move on. So professional ethics will be dealt with our next meeting with you. And then move on with the game. Don't forget to drop all your questions. We'll break it out to answer for you.